We've all heard about how important a good credit score is, and I want to help you improve your score with 5 simple tips today. I have over the years raised my credit score from the low 700s to 800 and up, and I've maintained that for about 2 years now. And there are a lot of things I've learned on my journey to a better credit score that I want to share with you. Like many of you, I want a higher credit score for a better interest rate when I go to get a mortgage, but credit scores are important for more than just loans, and I think that that's another really important thing to mention is I have secured rental units in a competitive city with lots of renters just because of my higher credit score. Sometimes landlords, when they have lots of options to choose from, will introduce a credit score check just to make sure that you are a reliable renter and that you will be paying them on time every single month. Credit scores can also impact things like your phone plan, surprisingly. So it is definitely a great idea to check in on your credit score and where you are at, do what you can to improve it. However, I do want to make it known that having a good credit score does not signify financial health by any means. You can have a great score and be living paycheck to paycheck every month. If you are somebody who has a lot of debt sitting on credit cards right now, it is likely in your best interest to either work on your impulsive spending, maybe the habits around that, or potentially closing your cards, which will have a negative impact on your score, unfortunately. Reducing your high interest debt is far more important than having a high credit score, especially if you're not looking to use credit. Credit scores are for people who want to utilize credit and leverage it. If you are just the everyday person who is renting and you have a place to live right now, you probably don't need to be this focused on it. Pay off your debt first. If you are in the boat of people who want to responsibly use credit, then I have some tips that can help you raise your score today. So we will look quickly at what impacts your overall credit score because I think that is an important first piece of knowledge that you need to know. Credit scores are measurements of different factors that have different levels of importance. So the first largest portion of your credit score is going to be your credit payment history. So this is about 35% of your overall credit score, and this just means that you regularly make your payments and you make them on time. So missing a payment has a huge impact on your overall score, and the lateness of your payment also impacts your score. So if you're 1 day late, it won't affect your score as much as being 90 days late. This is also where lenders will look for red flags, like do you have payments in collections, and do you have any other public judgments like bankruptcies, foreclosures, things like that. Next up, at 30% of your overall score is your credit utilization rate. So this is basically a ratio of how much credit is available to you and how much credit you are currently using. So for example, if you have one credit card and no other loans, and that credit card has a $500 limit, and you are regularly buying $500 worth of product on that card, even if you're paying it off before the statement due date, there is a good chance that your credit report will at some point report that you are using 100% of your utilization, and that is not good. Lenders want to see that you have a lot of money available to use, but you are not currently using it. So some of the people with the highest credit scores only use 10% or less of their utilization. The third largest factor of your overall credit score is your credit age, and this counts for about 15% of your overall score. Credit age is usually a measurement of how long you've had credit available, and this is usually the age of your oldest credit account. So if you opened a credit card at 18 and you still have that open, then your age would be your age minus 18, for example. It is super important to always keep open your oldest standing credit account. If you close those accounts, it will reduce your overall credit age. Next up, at 10% of your overall credit score is new credit. So do you currently have a bunch of new applications for credit? Did you open 5 credit cards in this year? If you did, that is going to negatively impact your score. And then the last portion of your credit score, at another 10%, is your types of credit. So lenders like to see that a consumer has different types of credit and they can manage paying all of those different types of credit off. Sorry, there's a motorcycle. Lenders want to see that you can effectively manage different types of credit and make your payments on time. I am not great with this one. This is definitely something that Credit Karma constantly tells me to improve on, but I am by no means going to open a loan for the sake of my credit score. All right, so now that we know what impacts your overall score, let's dive into some tips that you can work on. So tip number 1 is going to be downloading a credit reporting app. So I currently use Credit Karma. I've also used Borrowell in the past. You can use any of the credit reporting apps, just make sure it is one free. Shut the fuck up, dude. You can use any credit reporting app. Just make sure that 1, it is free, and 2, it is something that you enjoy the UI of. I am going to continue talking through this motorcycle because he is not going anywhere and I need to get this video filmed because it's my lunch break. I like Credit Karma because it sends me an email update every time my credit changes, so I know right away if I have done something to impact my score. Tip number 2 is to set up auto payments. As we covered, the largest portion of your credit age is your payment history. So you want to make sure that you're never missing a payment. Missing one payment can really tank your score and it's going to take a long time for it to recover. And the best thing you can do is to set up auto payments to make sure that never happens. This is something that I don't personally do just because I'm a crazy person who enjoys budgeting and checking my finances consistently. And I usually pay my credit cards bi-weekly anyway. But if you are somebody who pays your credit cards close to your statement balance date, I would highly recommend setting up an auto payment for at least your minimum payment, $20-$30 at the very least, and just to make sure that you have a payment every single month and that you're never missing one. For those of you who struggle with impulsive spending, as I mentioned, it may be in your best interest to close your credit card accounts. But what you can look at doing is getting a prepaid credit card where you preload money onto it. It will work similarly to a debit card, but this way you can make sure that you're never overpaying or missing payments and all that, and it still contributes to your overall credit score. Tip number 3 is to raise your credit limit. So this is a tricky one and you know you best, so make sure you are using critical judgment here. But raising your overall credit limit is a great way of lowering your credit utilization ratio. And this is how I have improved my score over the years. I have regularly opened probably at least 1 or 2 credit cards every year, and I do that to get the opening credit card points bonus. And then I will either close the account or I will reduce it to a free version. And this just helps me have a larger overall credit available. So I have about $90,000 available in credit cards that I could use at any point, but obviously I do not. My everyday spending I do on my credit cards never exceeds about 5% of my credit utilization ratio, sitting quite a bit below that 10% just to make sure that I'm never raising it beyond that. So you know you best. Don't go open 5 cards right now because we know that that doesn't affect your score in a good way. Maybe check with your bank if you can raise your credit limit right now, and then maybe in a month or 2 open a new credit card if this is something that's important to you. Another thing you can do to lower your overall credit utilization if you don't want to open new cards or raise your limit is to just pay your cards off regularly. So if you buy something, maybe treat it like a debit card and go pay off your card immediately. Or I like to do bi-weekly payments. Maybe you set up weekly payments, and that way your credit utilization is always lower on your card. It's not sitting at that full amount that you spend every single month on your credit card. All right, tip number 4 is to keep your oldest account open. So I know that we all got a crappy card when we were 18, 19, 20. We got some student card or something like that, and it's probably the worst card you have in your wallet right now, and we all want to get better points and better bonuses and all that stuff, but make sure you keep that old card open. I think we're all tempted to just simplify our lives and to close those accounts, but that will negatively impact your score. Your credit age is based off of the oldest card you have opened. So if you're constantly switching your credit cards and closing your credit cards, this can negatively impact your score. So what I do is I just make sure I always keep my student visa open, and it's a free card. Make sure you're not paying an annual fee on it, and also make sure you're using that card I think at least once annually, or else your credit company may close the account. I had that recently where BMO closed one of my credit cards because I hadn't used it. Also, make sure that you are not often applying to different credit cards. Even just an application for a credit card will go on your history. So if you want to make sure your credit age and your credit history is looking good, make sure that you are applying to only the credit cards you know you're going to get, and that you're only applying, once, twice a year. And my last tip number 5, is to try to have different forms of loans. And this is a tip that I'm not passionate about, but it is a tip nonetheless that I recognize can help some of you. So I only have credit cards as my form of credit. I am not going to open a loan just to have a higher credit score. That is not where I'm at. I recognize that if you are in a certain situation, opening different forms of credit can benefit your overall score and could also improve your financial health as a whole. For example, if you have a lot of money sitting on credit cards that you are struggling to pay off because the interest rates are so high, it might be in your best interest to open a lower interest loan with a bank to pay off your credit card and then to pay that lower interest rate to the bank instead. And then you would have 2 different forms of credit at that point. That can give you a much better overall score, but this is only 10% of your score. So if you do not have different forms of credit, do not panic. I don't either, and it's totally fine. I have over 800 score right now. And this is an official tip. 6 tips doesn't sound as good as 5 tips, but my last tip is to be patient. Things do not change in the credit score realm very quickly. If anything, they are very slow and drawn out. And if you missed a payment, don't beat yourself up. It will come up as long as you continue to make those payments on time and you work on these other factors. It will come up, but it takes time. You do not need a mortgage right now. Interest rates are atrocious. Why would you? Why would you get a car loan right now? No need. Stop rushing into things. Stop feeling the pressure from everyone around us to have mortgages and cars and all this. Just take a step back. Do what you can today to improve your overall financial health. Credit scores are not that deep. Take a breather. Thank you so much for joining me today. I hope that this was helpful in some form or another. If you enjoyed it, please give it a like. That helps me so much. And I would love to have you here if you want to subscribe. If you liked this video, I also have some other financial videos. I will link a playlist down below. Go check out some other videos while you are here. And if not, then I will see you in the next one. Bye.